first, most importantly, okay, so rate cut, big rate cut, which was anticipated.
It was tiny rate cut, but it was the first rate cut. So it's like prom night when you finally get with a person of the opposite sex.
Right.
I mean, the first one's very important. Okay. Like the first one is after 5 years, you'd agree. If you went 5 years, the first one's very important, right?
Yeah. So we've broken the seal. How
exactly. That? If that's the way you want to put it.
Yeah.
Okay, fine.
So bank rate went from 5% down to 4.75%. And a lot of exuberance. If it didn't go that way, I think there would be extreme panic, or a lot of people would be sad. But I'm curious from your perspective, how do you see this impacting things, if at all? And, the only reason it came down is because the economy is just tanking. So how are you thinking about the outlook now based on these rate cuts? And is this actually going to help anybody buy a house?
No. It won't help anybody buy a house. Okay. Today, it won't help anybody buy a house today. 25 basis point cut will not materially improve anybody's situation. Now, why is it meaningful? It's meaningful because it signals the beginning of something. It signals the beginning of a series of cuts. So there probably won't be any cut in July. By the way, if there's a cut in July, we should all be very worried, because that means the economy is sliding into the crapper much faster than, if there's another rate cut in July, like 2 in a row, that's a clear signal that the Bank of Canada governor is worried,
right?
Legitimately worried. So I suspect we'll see another cut in September. We'll probably see another cut later in the year. The most important cut is not in Canada. It is in the United States. We will probably see a cut in, again, if there is a cut in late, like the first week of September, because they have to shut down. In the United States, they have a tradition of never changing interest rates during an active presidential campaign. So once every 4 years, they have to take a couple months off irregardless. And this is one of those 4 years. So we might see a pause all the way into the late part of the year for the United States to make their first cut. But once the United States makes their first cut, then Canada will just follow along. So there will be multiple cuts in the States next year. There'll be multiple cuts in Canada next year. And the signal is simply this, and the European bank cut. So it's just a signal that the cutting cycle has started. Mm-hmm. So that's always good news. Who's it good news for? It's mainly good news for mortgages that renew, because there's a shit ton of them. We swear on this show, or we don't swear at all?
Yeah, we could swear.
Okay, good, because
we did ask you to be on this show, so
yeah, you understood what you were getting. Okay, so yeah, there will be. There's just a huge number of renewals on residential in the next 18 months. It's a massive number. So Bank of Canada recognizes that this is a true major impact on the Canadian economy when everybody who has a mortgage, which are typically people who are not old, right? Like old people are garbage consumers anyway, right? Like if you're my age, you're not going out to the restaurants as much. You're not going, you don't need kids. So you're not buying anything for kids.
Right.
There's a lot of things you just don't buy.
The house might be paid down as well.
Yeah. And you might not have a mortgage. Yeah. Excellent situations. You might not have a mortgage at all.
Yeah.
So who are the people who are most affected? Are people probably with families who are younger, who are at earlier stages in their career. And they will be impacted in a massive way to go from, particularly next year, we're going to see at the end of next year, we're going to see some people are going from 2% to, because the people who are renewing today were typically in the 3% range. Mm-hmm. So they were 5 years ago, they were 3%, it's 3 something, 3.5, 3.6, something like that. So this is a jump. It's a big jump. It's, 5.29 or whatever it is. But for 2% to go to 4.8 it's big. That's big. And they're also the most vulnerable because that was a purchase of a home. So this is their first renewal. So
right.
The Bank of Canada is aware of this. They know what a risk they run to do further damage to the economy. So
yeah,
I think everybody can just assume we are, barring a black swan event like China invades Taiwan or, nukes in the Middle East or, nukes in Ukraine or something just unexpected. barring that, I think we can assume that inflation will come down, because that's what happens when you destroy an economy. Inflation comes down.
Yeah.
Right. So inflation comes down, the economy gets worse, and interest rates go down throughout next year.